Good morning, everyone, and welcome to the Money Control live stream. You're watching Markets with Santo and CJ. Well, it's a big day. It's a policy day, and the Monetary Policy Committee has its task cut out given what has happened or transpired in global markets over the past 2 months. Since the last time the policy committee met, inflation was still quite high, but since then, at least domestic inflation, Santo, the picture has seemed to be a little benign now. It seems to be turning in favor, but I think the bet still is that the MPC will recommend raising interest rates by as much as 50 basis point later today. Apart from that, the key thing here now is, Santo, that what will be the commentary going ahead? Because last time around, people were expecting that because inflation was showing signs of slowing down, the MPC should indicate a pause. That did not turn out to be true. The MPC, in fact, suggested that they will have to continue hiking rates because inflation was still above their comfort zone. But now, given that we are seeing globally commodity prices have crashed, oil prices have come down from almost $110 per barrel when the MPC last met to almost $85 per barrel at this point of time, I think there is good, data points to support the fact that maybe the MPC may look at a pause in 2023 or maybe after December meeting. I think that is the important point from my point of view, because if you look at some of the commentary that came in from the MPC members themselves in the minutes to the last meeting, Professor Jayant Verma indicated that MPC's sole focus cannot just be inflation. It cannot be so that it's so, tunnel vision on inflation that it forgets other consideration. You can see that quote on your, screen, and he suggested that it's not really wise of the MPC to be so tunnel vision. And I think that is where I think the crux of the issue also lies. If the MPC continues to hike rate in tow with Fed, will that snuff out growth going ahead? Because we have already seen a lot of downgrades to India's GDP growth from multilateral organizations, from domestic private economists, who not. And apart from the policy action, of course, the other two talking points, Santo, will be the rupee, of course, because rupee is sitting at record low as the MPC was meeting, and the liquidity constraints that are now plaguing the banking sector. Banking sector liquidity has been, has come down quite drastically over the past 2 months, and it will be interesting to see if RBI takes some action on that front.
Well, quick points here. Right now, central banks and investors are grappling with the here and now. The overall global mood is very uncertain. So I won't be really surprised if the RBI gives a very cautious outlook, and it's going to be commentary that the market won't like much. A 50 basis point hike is almost a given. I don't think that should rattle the market so much, but the commentary as always will be key, and this time it's likely to be more cautious given the global backdrop. The second part about inflation that you've made, that inflation is not very high, but that I think is the headline inflation number. So there was this report in the Economic Times this morning saying that prices of essential items, daily essentials, have risen by between 10 to 22% so far. Now that's a fair bit of numbers. You see, it doesn't fully get captured in the inflation in the headline CPI or WI, but that's also hurting demand at some level. So there is some bit of pain. We can't ignore that altogether. So it would be a good thing at this point that RBI takes a slightly cautious stance. Of course, the markets are not going to like it for sure, but there's the other issue also. CJ, let's not forget, if US Fed keeps hiking rate, the interest rate differential between India and the US dollar widens. That means that there is a big problem then for our currency. More money keeps going into dollars. Already currency is quite weak. We are at a record low at this point in time. So in that on that front, the RBI then doesn't really have a choice. If the US Fed continues hiking rate, RBI will have no choice but to follow suit.
Yeah, but Santo, what would be the cost of that? Because in monetary policy and of course in any sort of policy making, there are always trade-offs. And given the fact that growth was just starting to recover in the June quarter and the March quarter, and of course RBI spoke very profusely about it in its previous policy statement. This time around, as you just said, I think the MPC would be quite cautious on the growth front, and I think now it is a very, very tough balancing act whether you support the exchange rate or you let it go, or do you support growth at this point of time? Let's not forget that we are entering also election season in India. There are multiple assembly elections lined up. The general election is just less than 1.5 years away. So in this sort of an environment, I think it becomes very critical whether RBI focuses on growth, which it has been doing for the past 3 years, ever since Shaktikanta Das came in as a governor, or now whether the battle against inflation just becomes a sole battle.
Well, that's it. What's the market looking like this morning?
Well, Santo, it is looking a little weak at this point of time from the offset. If you look at the XDX Nifty, it's indicating almost a 30-point cut at this point of time. It was as big as almost 90 points earlier in the morning, but we have moderated a little bit on that front. Cues from Wall Street, of course, were quite negative. If you look at some of the benchmark indices, S&P 500, NASDAQ, they both fell more than 2%, and this is despite the dollar index actually coming off a little bit from its highs. Apart from that, the main issues still remain the same. Santo, global recession fears, central banks such as the Fed and the ECB raising interest rates. So it remains a very, very critical juncture for global markets. But the interesting thing is, Santo, that foreign investors, with the end of the expiry of September derivative series, the October derivative series, they have started at the lowest level of long positions on the Nifty 50 index. And that, if you're a bull, you could read it like, probably this is the bottom, and it can only mean that they have to keep on covering short position from here. Or if you're a bear, you might look at that and lick your fingers.
Well, yes, can be argued both ways, but I would rather go with the with some bit of tradition here. October typically has not been a good month for the bulls.
So I'll go by 14 years ago. Yeah,
I'll go by history here in this case. But that said, there's no disputing the fact that at this point in time, sentiment is quite bleak, and you got the earnings season coming up. Investors will be looking for management commentary before going long in a big way, because there are no triggers at this point. There is no reason really to overcome it. Now the buy on dip strategy has worked well for a time, but I don't think you can just keep doing that repeatedly, right? Yeah. And we've already seen the results of some of that in the last couple of weeks.
And especially when borrowing money has become so much more expensive compared to the last time around.
See, higher rates do have an impact, because what most people tend to forget is that a lot of positions which is built in by these operators or HNIs or whatever, it's all on leverage money,
yes.
Right? So when the cost of funds increase, they are going to feel the pressure. When stock prices fall, there's going to be margin calls. So these are factors we can't avoid. Yes, the longer term India story is still shining, but we can't escape the shorter term problem.
Well, that said, let's move on to some of the stocks that will be buzzing in trade today. And the first one is from the infra space.
Yes, Concor, the stock was in the limelight a few weeks back on the railway land lease policy. Some initial excitement, and then the excitement died down very quickly when analysts read the fine print and saw that Concor doesn't really stand to benefit from that unless it gives up some of its existing land. Now that's one part of it, but the bigger play here, CJ, one is that the stock seems to be finding good support around the 670 to 680 rupee level. That's from where the stock has kept rebounding in the past. And according to brokerage house Edelweiss, the bigger play here is the dedicated freight corridor, the Western DFC, which has already been commissioned, and the full rollout is now expected over the next couple of years. Now once that happens, you're going to see some real jump in volumes for Concor. That is the bigger play. Besides, let's not forget, there's also the divestment angle. That is the other added trigger for the stock in the short term. So I would be looking closely at the stock for any sign of weakness.
Well, Santo, the DCF thing has been hanging over, as a tailwind for Concor for many, many years now. We're still waiting for the entire corridor to be made fully operational. But that is something that has been in the talk whenever anybody mentions Concor in the market. But for me, I think at this point of time, the market is likely to be a little bit more myopic than looking into the long term. Challenges are rising. Yes, the past 6 months have been spectacular if you look at it in terms of volume growth, because of the economy coming back out of the pandemic and the pent-up demand being so strong. But going ahead, growth slowdown would be a challenge, right? In the second half, you are already expecting, even if you look at some of the estimates from the private economists out there, they are expecting a little moderation in growth going ahead in the next 2 quarters. Plus, with the global economic scenario being the way it is of course going to affect our economy as well. So I think volume will remain in focus, Santo, over the next 2 to 3 quarters, given that we are coming off a very, very high base in terms of volume growth for Concor. Apart from that, the land lease policy, of course, it was one of the major negatives that were holding the stock back When it came out, everybody got very excited, but then when people read it, they realized that actually it does not benefit the company that much until unless it gives up a lot of its asset. Still, there are a lot of points on which clarity needs to be emerged. One of those points is that, say, for example, if Concor has invested already in the infrastructure, then how does it recover that investment, given that it is now giving it off in a competitive auction? So I think it will take another 2 months, I think, to some clarity emerge on the land lease policy. But till that happens, I think this is one stock that could remain a little in the consolidation zone going ahead. Well, the first stock on my radar today is Bharti Airtel, and now it's very surprising given that Bharti Airtel has been one of the decent performers in this September quarter, Santo, if you look at it in terms of stock performance. But the street actually has downgraded the stock. It has faced some of it was among the stocks which had seen the maximum amount of downgrades during the September quarter, and which is a little surprising given the fact that there is a lot of optimism around the 5G launch that is going to be a good kicker for revenue growth going ahead. Plus, tariff revision is expected later this year. Analysts are banking on another tariff hike later this year. So those will be the two immediate triggers. Apart from that, there was this concern that the broadband business of Airtel as well as the enterprise services business could come under pressure because competitive pressure was rising because of the high investment from Reliance Jio. But I think there is also, some confidence in parts of the market that Airtel will be able to protect its turf going there. So I think for me, Santo, this skepticism that we are seeing could actually be a trigger for further up move on Bharti Airtel.
Well, the stock has given handsome returns in the last couple of years. If you see from the lows of October 2020, the stock has given almost it's risen about 2.5%, huge equity base. So stocks like this also take some time to consolidate their gains. And let's also not forget, it's not as if the earnings has dramatically improved. If you were to use conventional methods very clearly, the stock is a little expensive. Remember, it's a capital intensive sector. And let's not forget the fact that India is also a price sensitive market. Now you may argue that it's a near duopoly in the telecom sector, but that story is also pretty well known, right? Ideally, you should see the stock just climbing, continuing to do well all the time, but that doesn't really happen. I think for now, most of the positives appear to have been priced in. The stock has had a fantastic run. The story is compelling, no doubt all that 5G and everything is good, but the run-up in the stock price over the last 6 months clearly seems to capture most of those upsides for now. So I think this is a story probably where returns could be muted in the short term.
Well, Santo, I think the only point I'll make here is that if you're betting on the leader, I think it makes sense to bet on the follower as well, because both of them being in a duopoly industry means that your performance largely will be the same. So it cannot be that the one will perform better than the other.
Well, let's also not forget, as I said, price sensitive and the market is maturing now.
I think it will be very crucial to see when the tariff hike comes in, whether industry players will see this year out and maybe wait for next year for inflation to come off a little bit, or whether they press on ahead with it and add to the inflation fuel and inflation fire.
ICICI Lombard, now the stock has been an underperformer for quite some time now. Till some time back, the company was focused mainly on profitability and not so much on growth. There's been a shift in the strategy of late, where it has decided that it will now go in for growth as well. Well, let's quickly take a look at the market before I continue with that. 84 points down Sensex in opening trade. Nifty is down about 12 points. So
I think we have seen a very sharp bounce back as well, Santo. I think Nifty is now flat and Nifty Bank is in the positive territory now. So clearly looks like a decent start ahead of the policy.
Should I remind you, CJ, it had opened some 130 points up yesterday.
Yeah, that is also true.
So, so don't get your hopes high so fast. We've got the monetary policy coming up. Well, coming back to ICICI Lombard, the stock has underperformed, and again, but with the shift in policy, shift in approach of the company from profitability towards growth, that should make a difference. Now, auto is the main segment. Auto insurance is what primarily brings in the bread and butter for ICICI Lombard, but it's also trying to develop its strength in the healthcare segment, health insurance segment. So that is something that brokerages are positive on. MK is one such brokerage which is very positive on ICICI Lombard. And remember, the stock has been underperforming for quite some time now, so there is very little to lose at this point in time.
Well, Santo, ICICI Lombard is a good example that in a stock market you can't paint everybody in the same brush. I mean, at a time when margins have become so much under focus across sectors, right? Across sectors and companies, here is a company which is willingly coming forward and saying we are going to sacrifice our margins because we want to chase growth. And market seems very appreciative of it, at least so far. But, going ahead, you talked about the auto insurance part, and I have spoken on this show before as well that I still don't believe that we should be so gung-ho about the auto sales recovery as the market has been over the past 6 months. It still remains to be seen how the festive demand, turns out, because remember, it's only the wholesale numbers that the companies report. Retail numbers have still not shown that great a sign that demand has come roaring back for the auto sector. So we will have to still wait and see how the festive period evolves, and only then you can make a sense whether this demand is just not pent up and this is something that is sustainable going ahead. So for me, I think the street is a little too optimistic as far as ICICI Lombard is concerned. And apart from that, the expansion into retail health, Santo, is not going to be an easy game for the company, because there is already a good competition out there. I mean, companies like Star Health and all have already gained a lot of market share and are also competing to gain even more market share going ahead. So that itself is going to hurt profitability going ahead. So for me, I'm a little curious to see that the market, where it has been, being so what do you call, strict about margin performance of other sectors and companies, is being so lenient on a company like ICICI Lombard because it's sacrificing margins for growth. Well, the next stock on my radar today, and probably one of the stocks that will be buzzing in trade today, would be ONGC. The stock was higher by almost 3% yesterday, and we realized later why that was, because crude oil prices jumped quite sharply yesterday. Earlier in the trade, of course, they gave up a lot of those gains later in the session. But if you look at Santo, I think the $80 to $85 per barrel becomes the base for crude oil at this point of time, given the market dynamics. Goldman Sachs yesterday said that the oil market has already turned into deficit. That means that downside from here seems very, very speculative. Apart from that, the stock seems to be very, very undervalued to me, Santo, because the market is only pricing in 40 to 45 to $50 per barrel realization for ONGC in FY23 and FY24, whereas its actual realizations could turn out to be in excess of $70 per barrel, even accounting for the the windfall gains tax that the government has at this point of time imposed on the company. Apart from that, of course, there's a crucial meeting coming up of the OPEC later this month, where they are expected to cut output once more. So that should, light a fire under oil prices going ahead, and that will be very, very beneficial for ONGC.
Well, we might see some uptick in oil prices given the factors you just mentioned, CJ. But again, are we going to see the same heady days for crude oil? That is not for the global economy, but I'm saying typically crude oil prices, the high prices that we saw till sometime. Are we going to see that back? My answer would be no. And more than the crude price plays, CJ, sentiment for the stock, as I've kept repeating on the show, is that after the repeated policy interventions by the government, that has made investors a little worried. Now, no doubt the stock does offer good value. There's no disputing the fact. But the approach then would be, when you see the stock price coming up very sharply, buy in at lower levels and take a strategic bet on that rather than kind of accumulate it in a big way. That is the approach, and which is why you've seen the stock underperforming for some time, ever since the government came out with that announcement on tax on exports. The stock really has nowhere gone back to its
actually the top loser in the Nifty, Santo, for the September quarter, down almost 17%. But I just feel that probably going ahead, if that OPEC decision does come out in favor
there is value, no doubt. I do agree that, but in this kind of a market, is that ONGC the stock that people would be going for when you are likely to get more value in other sectors as well, the way things are headed at this point in time? Syngene is the last stock on our watch list this morning. It's a subsidiary of Biocon. Now, again, a stock which has not done too well over the last few quarters. Market has largely ignored it, but some positive developments also in the company. Is one of the leading players in the contract research and manufacturing space. Focus on this company has got a strong focus on biologics, and recently it signed up a multi-year deal with Zoetis for its drug for treating osteoarthritis in dogs. It's a drug by the name of Librela, and now that is expected to bring in close to about $500 million over the next 10 years. Now, one thing which has been keeping Syngene's margins under pressure of late was that there's a lot of capex going on, and according to Batliwala and Karani, the company is now almost at the end of its capex cycle, and with the Mangalore facility getting commissioned, you will actually see some easing of pressure on margins as well. So, a story at this point in time which is being ignored by the market, CJ.
Yeah, I think, Santo, this is I think if you're looking at it from a valuation perspective, clearly there is a lot of potential for mean reversion going ahead, especially with the contract manufacturing side of the business. I think that is one side that if you're trying to play the biosimilar game going ahead, it's better to probably bet on the contract manufacturers than to actually bet on companies who are creating the formulation, largely because being a contract manufacturer, you tend to have diversified client base, and that allows you to have a much faster growth rate compared to a dedicated formulation maker.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do remember to post your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll be covering the RBI's policy outcome all throughout the day, so stay tuned to Money Control and have a great trading day.